Hey, this is Jack from Alpha Charts with a state of the market video. Today is October 21st, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. Now, I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, if you like these videos, please like and subscribe to my YouTube channel and follow me on Twitter at AlphaCharts365. All right, let's get into these markets. We had, this beautiful uptrend, and now we're making lower highs and lower lows. Price on Friday pierced through and closed below the 200-day, which it hasn't done, back in March 2023. So it's been a while. The VWAP from the beginning of the year still intact, so it's right in this support-ish range. What does it do from here, right? It's right at basically 420. And what happens? Well, no one really knows, but we do know that it went from, in 4 days, intraday high to the low, closing low, it went down 4%. So, a bounce here wouldn't be out of the question into moving averages, and then probably lower. That would be the logical place to go, because markets trend, and we can see the trend is lower. That's it, right? It was a brutal week, though. On the weekly chart, price was down 2.4%. Let's look at the RSP, 2.34, so it's about the same. And when we look at the daily chart on the equal weight, you can see that it's, starting to get, again, overdone maybe a little bit. Not saying it can't go down more, but eventually there'll be a snapback type rally for 4 or 5 days into moving averages, and probably some sort of fall lower, right? See a snapback here, you see a snapback there. So that's what usually happens. Qs right on this support-ish area. That's a big deal. This 353, 354 area. If it breaks, obviously the 200-day is an obvious spot for it to potentially go, and the VWAP, so 335-ish or so, that would make sense. Again, big looking top right there. Again, it flirted getting above the 50-day a few times. Like, that's a positive price action right up here, and then it just completely fell apart. Again, a break of 352, 353, and this can go a pretty good, decent lower, right? That's 5%. That's going to feel bad if that happens, right? That's going to feel real bad. Down almost 3%, 2.9% on the week. Equal weights were down 3.04, so basically the same. And let's look at the daily, and you see on the equal weight, it's now below the 200-day as well. And in this really, really at the bottom of this important area, we were real excited when it broke out of it over here back at the end of May. And I would say falling below it is a huge, huge negative on the market for the equal weights. Mid caps down 1%. Back here, I was actually getting bullish because it should have broken down from this consolidation, and it broke out. That was a big fake out because it just rolled right back over, right? And now it's moving lower. So we'll just get rid of that. And it's down making, multi-month lows, and really not quite year-to-date lows, but multi-month lows. Let's go to the monthly chart. Not monthly, weekly chart. Down 2.05. So it fared a little bit better than some of the other indexes. And then there's the IWM, down 1.28 on the day. And on the week, it was down 2.22. So you see it was a rough week. It did slice through, made new, again, multi-month, almost year lows, right? About a year. So year-to-date lows, and things are looking pretty rough. Again, if it gets to the bottom of this value area, you could expect, I would expect at least short term some sort of bounce. So the people that are getting short on Monday are probably going to get smoked. Just a guess. Let's keep going to the XLF. $30 got a hold. Right now we're at 32.23. Slowly but surely, it is making its way back down toward this 30.31 area. And I think this is the area that's got a hold. So we still have some space there. But again, much more bullish when you see the 50 crossing back above the 200-day. Much less bullish when it's crossing below. Just the way it goes. Looking at SMH. Below the 50-day moving average, everything is declining, lower highs and lower lows, not much to see. I think what you can look at is XSD, which is the equal weighted semiconductors. This is an important chart, I think. You see this trend line broke to the downside. You see the 200 days way up here at 201, and price is just getting demolished. Look at the weekly on the SMA, on the XSD, down 4%. SMH was down 4% too. Okay, so about the same. This just looks so much better, doesn't it? Holding up better, but really the equal weighted is telling a much more severe picture of what's going on in the semiconductor world. Not a good look at all. Let's look at housing, ITB. You can see this is a pure housing play, and it is now below the 200-day as well, living below the 200-day, and we're starting to get everything starting to cross back below. There's, again, nothing positive going on there, right? Let's look at XHB, which is housing and related stocks. Again, nothing positive going on right here below the 200-day, and now we're starting to get these moving averages starting to cross below it as well. Now we're going to go to IYT transports. So cap weighted. Again, living below the 200-day, right? We keep saying that. Not a good look. And then let's go to XTN, equal weighted transports. 50 is about to cross the 200 as well. The trend is lower. We may get snapback rallies along the way. That could even be very convincing for 3, 4, 5 days. But as of right now, the trend is lower. All right, let's go to the internals and see what they are telling us. Here's the VIX, and you can see the VIX is now at 21.7. So it rose quite a bit off the bottom. There's still room to the upside if it wants to keep going for volatility to increase. I think it's likely. I think up here above the red line is when we can start looking for, potential bounces and things of that nature. Credit spreads. When we look at the credit spreads, we talked about the up consolidation, up consolidation, up consolidation, up consolidation. The up is usually the final piece. And again, we don't know if this is going to be the start of it or not. It's still within the consolidation period, but things are getting, things are getting tighter and tighter as time goes on, and eventually it will have to pick a direction. Again, that last up tends to be towards the end. So we'll see. That's what I'm watching there. Next, let's look at breath, MMFI. Breath continues to just get demolished. Actually, that's weekly. I've been on weekly charts. That's fine. It works just as well. But you see the VIX, it gives you a little better of a look right there. And IEI, HYG, a little bit better of a look right there, how it's actually moving up. Weekly was fine too. It showed exactly the same thing. And then looking at MMFI, this is percent of stocks above the 50-day moving average. And you see it's at 19.3. And again, I wanted to get all the way down here for a true overwashed out, thing. Again, when I see multiple of these kind of working together, that's when I get excited. Multiple extremes. We don't have that yet. Here's the put call ratio, equity only. We had a couple little nice washout moves here, but nothing that really has materialized. So these are just potential signals. And again, I wouldn't be shocked if we get one more really large one that eclipses this one, maybe over 2, maybe even to 3. That wouldn't shock me. And that may mark the bottom. We're watching for that. Again, we don't have that yet. So, let's look at the dollar, DXY. Dollar consolidating as the markets went lower. It's funny though, the dollar did not break out. It's just consolidating in this kind of flag looking pattern. So again, as this kind of gets tighter and tighter, the direction is going to be really, really important. If this breaks higher, that's going to put a lot of pressure on equities. And then looking at TNX, it basically got to 5%. As the highs, the high right there was 4.996 and 4. Okay, so just a hair under 5%. I think 5.1, 5.2 makes sense, right? Looking at the weekly chart. And I think 5.1, 5.2 makes sense. And then when it gets there, we'll see. Maybe that's where we start to see extremes in other places. Again, it could go just sideways for a while. That wouldn't shock me. It's done it, it's done it before. So it doesn't have to keep going up, but it could stay sustained at 5.2, which again is going to put a lot of pressure on equities over time. So this isn't like, hey, this is my indicator, now do that. This is okay. As this continues to work itself through the economy, it's going to put pressure on stocks, right? As people have to refinance at higher rates and can't get financing, that's gonna be a problem. So not a good sign either. We have rising rates, and the Fed didn't have to do anything to get this done. So kudos to them for making that happen. But overall, we'll just talk about. We'll look at the cues real fast. We're at points where we could see, somebody wants to play to the long side here. I'd be real careful that you don't overstay your welcome, right? We're at support, we're going to bounce. Well, maybe, or we can flush 5% real quick or more. So we just have to be real careful. What is oversold can stay oversold and can keep going for a while. So good luck this week. Obviously, it's a cautious market. Any bounces, I think, are considered suspect. Have a good day. Bye.